Hello and welcome to Compass Global Markets weekly foreign exchange update. I'm Tony Boyajian. We'll kick off the week by talking about how the Aussie dollar has strengthened over 3% in the past week. It's reached new, fresh 15-month highs around the 78 US cent level on the back of a combination of strong domestic data, Chinese economic figures, soft US inflation. We've also seen weakness through US retail sales figures. The dovish language that we saw last week from the US Federal Reserve Chair, Janet Yellen, reinforces the expectations that the Fed's pace of aggressive interest rate rises will be diminished, and the market is now expecting only a 40% chance we'll see another rate hike by the end of this year. This time last week it was a 50-50 call that we'd see another rate hike as early as September this year. So given that US wages growth are very poor and remain stubbornly weak, and the fact that the US dollar index, which is a measure of a basket of currencies weighted against the US dollar, is trading at 10-month lows, we expect the US dollar upside to remain limited. On Friday night we saw US CPI inflation figures come out. They rose by just 0.1% in the month of June. The annualized number is only up by 1.7%. It remains below the Fed's target rate of inflation of 2%, and it's been that way now for over 5 years. Over the weekend we also saw US Senate Majority Leader Mitch McConnell make a statement about how the US Senate will defer its consideration of the healthcare bill, the revised healthcare bill, due to lack of support that it can pass. Now, if more than 2 Republicans renege on the revised bill, it could delay President Trump's economic policy agenda. This undermines the tax cut implementation process for this year, and it just delays the inevitable, which means the US dollar upside will continue to struggle. We've seen China's economy expand by 6.9% in the second quarter. It's driven mainly by net exports and housing investment figures. China retail sales also surged by 11% per annum. It's the strongest growth in retail sales in China for over 18 months. And this bodes well because we've seen production and investment figures also rise, and we expect this to help support the Australian dollar, because whilst we've got subdued inflation in China, it will continue to support base metal prices, and as base metal prices continue to rally, Australia's terms of trade will improve. Overnight we just saw iron ore, for example, strengthen by 2%. So the Aussie dollar today will be impacted by the Reserve Bank's meeting minutes for the month of July. Now we expect their neutral policy to be reinforced. This will limit the upside on the Australian dollar until Thursday's employment numbers come out for the month of June. Now our forecast is we'll see between 15 and 20,000 rise in jobs. If it comes to fruition, it'll be the 4th consecutive increase in the jobs market, which also bodes well for the Aussie dollar. So potential for the Aussie dollar to retrace back up towards that 79 US cents if we get a really strong employment data on Thursday. Otherwise, look for that 76 cent level of support to be maintained on the downside. Don't forget to watch us every Thursday lunchtime on Foxtel and Optus TV on Sky Business News for our regular weekly markets update. Thanks for watching. I'm Tony Boyajian. Have a great week.